Warren Buffett is sitting on over $325 billion in cash, and it's no accident. While many investors scramble to put every dollar to work, Buffett's strategy is to keep significant reserves. Why? Because he understands you don't have to be in the market all the time to succeed. Markets right now are expensive, but Buffett knows that patience pays off. By holding 25% of Berkshire's Hathaway portfolio in cash, he's prepared to trade when the market presents undervalued opportunities. I'm Francisco, PhD researcher and MIT innovator, here to help you think like the world's top investors. Buffett follows a methodological approach. He acquires 100% of private business with strong cash flow and invests in public companies when the price is right. His famous advice: be fearful when others are greedy, is at the core of this strategy. With bond yields rising, cash reserves also offer Berkshire a safe place to grow while waiting for the next move. Buffett cash isn't just about buying opportunities. It supports Berkshire's succession plan and minimizes capital gain taxes, ensuring long-term growth. In this video, I will uncover the lessons that you can apply from one of the world's greatest investors, and I will finally answer the question why Warren Buffett is holding so much cash.
And the number one reason is that when you go and check the Standard & Poor's, I want you to analyze one key indicator that Warren Buffett loves, and it's called the PE ratio. What does it mean? It's the price to earnings ratio that you can see back to 1926. Now, I want you to focus on two things about this ratio. Number one, check here what happened in this era. When the PE was very high, then you had a crisis. Just before Second World War, also you had a crisis. Now, when you move a little bit longer in the year 2000, it was more than 40, and then you had a crisis. But the worst came in 2008 when it was reaching 120. So, think about this. Warren Buffett is always thinking, okay, what is my PE ratio right now? Because depending of that, then you know if it's a good time to buy or not. Now, an important thing it isn't. If we compare to 2008, man, still is very low in 2025 because it's just, under 30. What you should be checking, but that's one of the key things of Buffett, because remember that he waited for the crisis to come, then the index crashed, and then he was buying a lot of companies in this. So when the ratio was under 20, Buffett was buying. And that's one of the key difference of Warren Buffett compared to the rest of the people. He knows and understands that the economy is cyclical. So you have to be amazing to really see, okay, now is the time to buy. Remember what Buffett always says: buy when there is blood in the street. Just check here. Just before, when you had the COVID crisis, it reached up to 36. So still, when you are seeing this first indicator just growing like crazy, then that could be one of the reasons that Warren Buffett is worried. Now we're going to go to the second element that he's holding too much cash. Now, let's see his portfolio, and then based on that, we can understand what is going on. Well, number one, Apple is still 23% of his portfolio. It's $69 billion. Incredible, isn't it? Yes, because he has been investing in Apple, but in the past years, he's been divesting. Why? Because it was just so much part of his portfolio having a lot of Apple. And to be honest, Apple hasn't done anything interesting for the past 5 years. The only thing that they built was the Apple Vision Pro, which now they have plans to not continue neither expand that, which I think is tremendous failure. I don't know what is happening with Apple, but I think Buffett, he needs to sell more Apple shares and buy other stuff. It's still a lot. And let me know, guys, what do you think? Like, their iPhone releases are pretty bad. Like nothing, there's no innovation in their phones. Like they look exactly the same. The word with Apple intelligence or their AI model, that they were not being able to even build their own AI, even though they have all of our data in the phones. So I think that's a missed opportunity for Apple, and he holds almost $70 billion. That's a lot of money. Okay, number two, American Express, 16%. American Express, amazing company, great performance. People are gonna still spending like crazy. People just want to spend and just have those premium elements. And yeah, that's the reason I will keep American Express. Bank of America, well, in the other side, you should start divesting Bank of America and I start investing in one of the other ones that I'm going to show you a little bit later. It is also in the financial industry, but he has so much of Bank of America, almost $35 billion. Coca-Cola, well, you know, Buffett has been a firm believer of Coca-Cola, and Coca-Cola will still exist in the next 50 years, no problem at all. Chevron and Occidental, oil companies, very important. Well, it's just 4% of his portfolio. Heinz, people need to eat. Let's go down. Citigroup, he bought a lot in 2008. Visa, he has some Amazon stocks, not so many, but I want you to check this. He has $2 billion in BYD. Have you noticed something interesting in his portfolio? He doesn't have Tesla. He has Mitsubishi from Japan. He has Mitsui and he has BYD, which is the largest electric vehicle company in the world. Not by market cap, of course, Tesla is number one, but in terms of the production. Just check the data, and I did a complete video about that. That when you see BYD as a stock, is a tremendous opportunity. So actually, this shows that he's thinking long term in terms of the probabilities of this stock. And you should also think, why is he thinking it that way? He's also a firm believer of financial shares, and he has Domino's, which has outperformed many of the big stocks. So this is his current portfolio allocation. So even though he divested from Apple, it's still pretty big. He is very big in financial industry. I'm gonna show you the stock that I believe is gonna be very interesting. Not financial advice, but I literally covered this stock before their IPO and is within his portfolio. I'm talking about, yes, go here, New Holdings. He has $1.1 billion of New, and we're gonna analyze New so you can see what are the opportunities in that case. Imagine they offer stable coins, specifically USDC. And this is very interesting because Nubank is showing what is going to happen in the next decade for most banks around the world. What Nubank has done on January 2025, most banks will do in the next 5 years. Think about that. And when that starts to happen, you will thank me. Why? Because people in Latin America, remember, this is a Latin American bank, are going to start to invest more on the US dollar. That's the reason I believe the US dollar will still be the number one currency in the world in the next 30 years. Because stable coins are the key elements that combine the technology from cryptocurrency and allow people to really access to new types of services. And when they have the Nubank Crypto in Brazil initiative, which first, they bought reserves of Bitcoin. Second, they offer cryptocurrencies such as Ethereum, Bitcoin, and Solana. And third, they're expanding that with the digital dollars. So if you have 10 USDC, you can receive 4% per year on stablecoins. And that's the play. It's very simple, that is very powerful because this will incentivize people to really invest in US dollars because they're digital US dollars. That's the most interesting thing. And as you can see here, for example, they're talking about all the other cryptocurrencies that they have and how easy is their swapping tools. So I believe that Nubank is $100 billion bank in the next 5 years. That's the reason I'm strongly aligned with Warren Buffett in what he talks. And now I'm going to tell you about the other reason of why Buffett has so much money in the bank. And why Buffett will just spend his 325 billion if he has a successor that is waiting to take the company. And I'm talking about Greg Abel. It's a Canadian. He has been in Berkshire Hathaway since 1999 and has been managing an energy company within Berkshire Hathaway when they acquired the company called Cal Energy. And the good thing about what they did is that he later became part of the board of advisors, and even Charlie Munger praised him as a sensational of doing business. So now all the board of Berkshire Hathaway is very happy with what Greg could bring. So the good thing of having that amount of money, because Charlie Munger died, Warren Buffett will die very soon. We don't know how. We'll expect him to live a lot of years because, man, for someone older than 95 that just has that clarity, when I want to be 95, I want to have a same mental clarity as Warren Buffett. That would be crazy. And but it's a lot of money, 325 billion. So it's like, I think Greg literally said to Warren, hey, Warren, don't spend all the money, give me time, because as soon as Buffett passes, then Greg will say, okay, this is the new strategy for Berkshire Hathaway in the future. So that's another reason. And finally, I'm going to show you the last reason why Warren Buffett has $325 billion in cash. And the last reason why Buffett has so much money is because he had put 288 billion on T-bonds, on the US Treasury. That's it. Why? Because in the past 5 years, the bonds have been generating a lot of money, and it's one of the safest investments you can make right now. So if you have two options, invest in something risky, which is most of your portfolio because they're stocks. He doesn't have crypto, missed opportunity from Buffett, but he has a lot of money in T-bonds just by leaving them. Imagine, he's making $15 billion per year on the safest investment in the world. 15 billion. That's how much money he's making just by leaving the money there. So that's an amazing strategy, because when the market goes down, and it will, even the interest that he has been generating, what about inflation, Francisco? Yeah, we know it. He could use to buy and acquire companies and to invest more in things that he believes. So those are the 5 main principles from Warren Buffett. From taking full advantage of the T-bonds from the US government, that you can do it, to having a successor plan, to really identify what is the price to earnings ratio in the Standard & Poor's and what are good times to buy and not, to have enough cash to invest, and to have a reliable think about the future is what makes Warren Buffett one of the greatest investors through all time. Thank you very much, and see you tomorrow.